I don't think state should issue money, or at least I don't think it's good that states should issue money, um, in the sense that I would like to build to a world where technology allows that to no longer be how it's done. Separating institutions is very hard. Basically, power coalesces, and then someone with all the power has to agree to give some of it up. So to make things like an independent judiciary or an independent central bank, it's actually really hard to do. And so I think that goes back to the Hayek quote, which is that you have to introduce something that's just unstoppable or nearly unstoppable. And so far, the best answer I've seen for that is Bitcoin, because if China has trouble banning something, it's kind of powerful. So China has banned Bitcoin and Bitcoin mining multiple times. It's still the second biggest mining jurisdiction in the world, even though it's less than it used to be. People there still use Bitcoin. It's something that it's powerful.
Centralized currencies, governed by governments and financial institutions, have long been subject to manipulation and control. The issuance and management of traditional currencies lie in the hands of a select few, leaving the masses vulnerable to economic instability and political influence. Bitcoin, on the other hand, operates on a decentralized network where transactions are verified by a distributed network of nodes, eliminating the need for intermediaries and central authorities. This decentralized architecture provides Bitcoin with inherent resistance to control by any single entity or government. Unlike centralized currencies, whose value can be manipulated or debased at will, Bitcoin's scarcity is built into its code. With a fixed supply of 21 million coins, Bitcoin offers a hedge against inflation and arbitrary monetary policy, providing individuals with a store of value immune to government interference. In a recent interview, Lyn Alden speaks highly of Bitcoin as a potential solution to the challenges posed by centralized currencies. Alden advocates for a shift towards a more decentralized approach to money issuance, where individuals have greater control over their financial transactions. She sees Bitcoin as a promising step in this direction, offering a viable alternative to traditional centralized currencies. Through technological innovation, Alden believes that individuals can reclaim greater autonomy in their financial lives, paving the way for a more equitable and resilient monetary system. Let us now view clips from the interview as Lyn Alden shares her insights. As we show you these clips, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more similar videos. Make sure to stay through the end of the video where Lyn Alden explains how Bitcoin is the solution to the ongoing challenges in our monetary systems. We hope you enjoy the video.
I don't think state should issue money, or at least I don't think it's good that states should issue money, in the sense that I would like to build to a world where technology allows that to no longer be how it's done. The way I would describe it is that since the dawn of the telegraph era, when people needed faster money, it was kind of a natural consequence that it would kind of coalesce, and then governments would just take it away from banks, basically. It had a natural centralizing force to it. And so I would like to see technology allow for some of the incentives to change so that is no longer the case. I think Hayek described it best, which is, through some sly roundabout means, introducing a new money that they can't stop. If we look at the past 150 years, most kind of challenges with money have been solved with more and more centralization. But of course, that comes at the cost of corruption and the downsides of centralization. Decentralization has a cost to it, then it gets benefits. And in this era, in an era where we want to send money, on the internet to buy something, we want to send it around the world, we want to send it just across all sorts of areas. The abstraction needed compared to commodity money is so big. And so I think governments have had a lot more arbitrage opportunities. We can imagine, for example, what the Platonic ideal of money would be. It'd be something like if we could just mentally beam gold to each other, for example, and if that's just something we could always do, it'd be very hard for governments to come in there and be like, no, stop doing that. Here's these paper things you're going to trade around and you're going to use that as money. It'd be hard to introduce that. Instead, the way fiat currencies get introduced is basically by initially trying to solve a problem, which is gold's portability, authentication, and other challenges. And then over time, people get rug pulled. And it just keeps happening because it's on one hand, they're trying to solve a problem, but then the incentives start coalescing, and then they ruin it. And then if it gets bad enough, there's some degree of reset, some degree of decentralization again, but then they do it again. And one of the problems we see in developing countries is that it's hard for them to ever, like, separating institutions is very hard. Basically, power coalesces, and then someone with all the power has to agree to, like, give some of it up. So to make things like an independent judiciary or an independent central bank, it's actually really hard to do. And so in a lot of countries, it just doesn't happen. And so you have very coalesced government, and the government can just fire the head of the central bank whenever he wants. The president can just get rid of him. And so because of that, you have a very centralized system, which tends to decay more quickly than one that has more degrees of checks and balances in it. Power corrupts, and having the ability to control everyone's, like, accounting and savings unit is a rather extreme form of power.
Alden's skepticism towards the traditional model of state-issued currency stems from a deep-rooted understanding of historical trends. She highlights the trajectory of centralization in currency issuance, tracing its origins back to the telegraph era. Governments, driven by a natural inclination towards control, have historically centralized power over monetary systems, often at the expense of transparency and accountability. Alden champions decentralization as a viable alternative, particularly in an age dominated by digital transactions. She envisions a future where technological innovations, such as Bitcoin, offer individuals unprecedented autonomy and choice in their financial dealings. Let us now look at more clips of the interview as she explains her take on the matter.
When the entire world operates like this, so a lot of people say, I wish we would just go back to another system. But when you see something happening literally everywhere, you have to recognize that the incentives for the system being like that are very strong. That there's not like one country outlier that doesn't do this. And so because of that, I think only with other technologies is that even going to be a possibility, not even a certainty. And that's kind of the challenge going forward, which is that I think people deserve better money. I think that, if money is a market good, is something that should have competition. Like, people should be able to choose what money they use. And in the modern era, if a nation state controls the borders, so they control both the physical borders, so ports of entry, you can only bring so much cash or gold through an airport, for example, or then they control the financial borders in the sense that if your bank wants to wire money internationally, the government has full control over, what amounts or where or who can do that. So they have full control over both types of in and out transactions, with obviously some small amount of contraband and things like that can get through. But basically, they have a very tight lock on the borders. And some of the recent technologies start breaking those currency silos. So Bitcoin, stablecoins basically say either a decentralized currency or a centralized currency, but in another jurisdiction, like say a gold-backed stablecoin in Switzerland or a dollar-backed stablecoin in the United States or any other country. These are now these centralized hubs that can be sent peer-to-peer. So like you can send it with a QR code over a video call. You can send it over email. You can send it over a DM. And so money can now kind of go around those border checks. And that actually allows money to compete more globally, the way that it used to. And so I think that goes back to the Hayek quote, which is that you have to introduce something that's just unstoppable or nearly unstoppable. And so far, the best answer I've seen for that is Bitcoin, because if China has trouble banning something, it's kind of powerful. So China has banned Bitcoin and Bitcoin mining multiple times. It's still the second biggest mining jurisdiction in the world, even though it's less than it used to be. People there still use Bitcoin. It's powerful. And the example I give is that in 2021, when China did their most aggressive mining ban, it was successful in the sense that half of the Bitcoin network went offline in the course of like a week or two. And if that happened to like any other network, if that happened to Amazon and their servers, and they said, okay, you have to unplug all your servers and move them internationally, or if that happened to Microsoft, you can imagine the disruption in all of their services that would ensue for months, maybe over a year. Whereas Bitcoin, all it did was slow down So the average block time increased from 10 minutes to 18 minutes. And then the automatic difficulty adjustment kicked in within a week or two and brought that to 10 minutes again. And then like a swarm that's been disrupted, those mining rigs just kind of gravitated around the world to other jurisdictions. Some of them went to Kazakhstan for a period of time and then went to Russia. Some of them went straight to North America. So Canada and the United States increased their hash rate. Now we're seeing Africa gain a little bit of share with companies like Gridless. And so all they really did was make the network more decentralized. And then ironically, some of that mining emerged again in China. Basically, there's still something like a fifth of the network hashing out of China, even though they tried to ban it. And so that's so far, I would argue, kind of the most powerful alternative to some of the large currencies.
In the pursuit of a decentralized monetary system, Alden advocates for a paradigm shift in our approach to money. Rather than relying solely on state-issued currencies subject to centralized control, she envisions a future where individuals have the freedom to choose their preferred medium of exchange. Through technological innovation and a commitment to decentralization, Alden believes that we can unlock a world of financial possibility, where autonomy and choice reign supreme. Alden sees Bitcoin as more than just a currency. She views it as a symbol of empowerment for individuals seeking greater control over their financial destinies. By embracing Bitcoin, individuals can transact freely and securely, bypassing traditional barriers to financial sovereignty. Meanwhile, renowned author and financial expert Robert Kiyosaki, famous for his best-selling book, Rich Dad, Poor Dad, has issued a warning to investors regarding traditional commodities like gold, silver, and oil. While Kiyosaki acknowledges his ownership of assets in these sectors, he highlights a critical flaw. The more their prices increase, the more of these commodities are found. In contrast, Kiyosaki praises Bitcoin for its fixed supply, emphasizing that regardless of its price, there will only ever be 21 million coins in existence. The concerns raised by Kiyosaki come amid a surge in Bitcoin's price, fueled by growing demand for spot Bitcoin exchange-traded funds. These ETFs have been accumulating Bitcoin at a rate that exceeds the daily mining output, emphasizing the scarcity of the digital asset. Analysts from Bernstein, Scott Melker, Mike Novogratz, and Matt Hoogan all share bullish sentiments, with price targets ranging from $150,000 to $200,000 shortly. Even billionaire investor Mark Cuban recognizes Bitcoin's scarcity as a significant driver of its value. Kiyosaki, known for his optimistic Bitcoin predictions, recently reiterated his belief in the cryptocurrency's potential. He suggests that Bitcoin is poised for further growth, with a target of $300,000 in sight. Encouraging investors to act swiftly, Kiyosaki views even a modest $500 investment as a prudent step towards financial security. His stance underscores the growing recognition of Bitcoin's value proposition, particularly its finite supply, in an increasingly digital and uncertain financial landscape. Do you agree with Lyn Alden's perspective on the flaws of centralized currencies and the potential benefits of a decentralized monetary system? Share your insights in the comments. If you found this video useful, please consider giving it a like and subscribing to our channel for more valuable content on cryptocurrencies and finance. Thank you for tuning in, and we look forward to seeing you in our next videos. As always, happy investing.